So the rand is steady so far today as investors brace for fresh clues after an unexpectedly strong U.S. jobs report supported the case for more big interest rate hikes from the Federal Reserve. Let's make sense of all of this. We're joined now by Petri Redelinghuys, founder and trader at Herenya Capital Advisors. A very good afternoon to you. So is it a good afternoon on the markets? The rand is firming against major currencies.
Good afternoon. Yeah, the market's a bit quiet today. I mean, we're slightly higher, about 0.6% up on the top 40 index. So not a bad day, but just extremely low volume. Obviously, we have a public holiday tomorrow, so I think a lot of the bigger market participants taking the day off, taking a long weekend today, and at least a low volume, sort of slowish kind of day. But generally, market's grinding higher, so we can't complain too much. As you mentioned, the rand quite a bit stronger, while relatively stable. It's about 0.5% stronger versus the dollar at this stage. After the jobs data over the weekend, or just before the weekend, market's looking somewhat resilient at this stage. I guess we'll see how the rest of the week unfolds. Obviously, we're not around tomorrow. We have the day off, but on Wednesday we resume.
Enjoy your day off tomorrow. So gold prices are holding on to their biggest decline in 2 weeks, while oil hovers near a 6-month low. How should we understand that?
I think we should keep things a little in perspective with the gold price. Like, yes, okay, it was the biggest decline in almost 2 weeks, so it sounds real bad. But if you take to the gold price from where it was 2 weeks ago to today, we're quite a bit higher, right? 2 weeks ago the gold price was 1,725. Currently, the gold price is 1,777. So we're up around $50 on the gold price. Yes, Friday saw the gold price move down a little bit. Currently up around 0.2%. So we're starting to claw back that. I think, in perspective, it hasn't really been the most powerful move in gold prices. I think the week is yet to begin. Obviously, the U.S. markets tend to be the leaders. So once they open, we'll get a firmer sense or a better sense of what markets intend to do for the week. So far, though, it looks as if markets want to trade higher. So I'm not expecting gold to sort of shoot out. If we can get the gold price above $1,800, I think then we have room for it to run a little higher. But for now, that's kind of the level that we have to watch. And, we might see gold trending sort of between 1760 and 1800 for some time. On the oil side of things, oil is under a little bit of pressure. It's down around 0.75%. It has been under sustained pressure almost since the beginning of June, sort of mid-June to now. It's been under quite a bit of pressure. Expected to come down to around $90 before finding some support from there. We may see higher prices into the second half of the year. Fundamentally, nothing's really changed in this oil picture. We still do have an energy sort of shortage on a global scale. The only thing really putting pressure on, oil prices, energy prices at this stage, particularly oil, natural gas prices, not so lucky, right? Natural gas prices still trading near highs. But particularly oil is that this anticipation of a global recession, right? Particularly coming out of the U.S. And to be fair, we can't say the anticipation anymore. We have had 2 quarters of consecutive sort of GDP contraction in the U.S., so that is a recession, right? I guess, energy prices under pressure from the expectation that the anticipation that this recession gets worse, and that higher interest rates continue to slow down economic activity, and this continues to put pressure on energy demand, and therefore we see oil continuing to come off. What is interesting, though, is that from a structural perspective, the market still is in a shortage position of oil. So getting physical oil delivered is still extremely challenging. However, the front month or the near-term futures oil prices, which is obviously the oil price that we quote all the time, is still under pressure. However, if you look 6 months out and 12 months out, those oil prices for delivery at those times are still somewhat higher than what we are today. So perhaps in the short term, energy is a bit mispriced, and we see higher prices over the longer term, or perhaps the market's anticipation of exactly how much slowdown is going to take place. Particularly, also there's new tensions now with this China-Taiwan situation that could have a big impact on sort of industrial production on a global level, as well as supply chains and all sorts of things, and that could further reduce demand for oil in the near term. However, in the medium to longer term, that demand will still remain robust. So For now, let's take the relief where we can get it. Stronger rand, stronger oil price. Let's hope this lasts until the next cycle for the fuel prices to be adjusted lower.
We'll take it and run to the
We can only hope, yeah.
Absolutely. Freight and Logistics Group One Logics, has warned that its headline earnings may fall between 55 and 75%, meaning what for them?
Well, I mean, they say that they're still in a sustainable position as they have some, loyal big customers that are still around and will continue to do business. However, they've been struggling with a lot of things. Firstly, there was a COVID lockdowns. I think at some point we can finally stop talking about that. Thereafter, there were some natural disasters. First there was public unrest in KZN, which did a lot of damage. And obviously put a lot of their customers in hot water. So there was a reduction of demand for their services. Obviously, they're in transportation, right? So, not a lot of activity happening in KZN for a while. Then there was a natural disaster there. Plus, we've got this ongoing I don't really know what to call it. I don't want to call it social unrest because I'm not sure that it's quite at that level. But there's always blockades and people, tipping over trucks and stealing the contents and setting trucks on fire and that kind of stuff. And it's really starting to put a lot of pressure on the logistics guys, right? So a couple of things are happening. One, obviously their input cost is going up in the form of fuel prices, essentially. Plus there's been sort of a knock on the demand for their services as companies are kind of reeling with trying to recover from what happened in July last year. In KZN, plus then there were the floods and there's droughts in other parts of the country. So a lot of the industrial sort of production activity that was taking place and the need for transportation has sort of waned a little bit. Plus you've got this headwind of the, basically essentially people blockading roads and doing all sorts of things trying to be disruptive and disrupt the economy. So those things are impacting businesses, and One Logics obviously is one that is very, very sensitive to that type of stuff. And unfortunately, that means that they've had a lot of expenses that they have to cover, and not the opportunity to sort of earn the money back because the trucks have been standing still, been blockaded somewhere. Sure. So that's a bit of a tough one for them, to be honest. And I think we can be hopeful and say, well, look, in general there should be a recovery. The natural disasters are behind us. The violent protests that took place in KZN are behind us. So from here it should be a little bit better. But of course that's provided nothing else happens in the next year to put more pressure on them, right? So yeah, not a great set of results, unfortunately, but largely due to things that are outside of their control.
What about Paper and Plastics Packaging Group, Impact? Their profits rose by almost a quarter. So what do we put that down to?
Yeah, so profits are up by almost a quarter. I think their business is starting to recover a little bit. There are obviously some headwinds that they are dealing with as well. The major headwinds that they pointed out in their, sort of statement today was really around, a drop in demand for packaging for fruit that is destined for Europe. So there's a whole bunch of, sanctions with Russia plus unrest. Unrest, it's proper war happening in the Ukraine. And how this is impacting sort of the European market. There was also some legislative changes recently in terms of freezing standards and that kind of stuff. So citrus farmers are having to potentially find new markets. And this is obviously a lot of the business that they did was or that they do is packaging fruits and fresh produce for international transport. So that could potentially become a headwind unless that situation is resolved or unless we get some more clarity around how, our farming or farmers are going to find new markets to send their products to. But because of that, we can see a change in the farmers' behavior that they are essentially packaging and transporting less fruit. Obviously, that impacts One Logics as well. And this is a potential headwind for Impact. However, they do cite that there is sort of a return of demand for packaged goods in the quick service sort of restaurants arena, as well as in convenience stores and that kind of thing. So from a South Africa only perspective, things are starting to pick up a little bit. However, there are some headwinds. There were a couple of sort of balance sheet activities, discontinued operations and that kind of stuff. They're also looking to sell one of the businesses that they have, and they're still waiting for insurance claims to be settled from the unrest in the KZN last year. So In general, though, I mean, their business is recovering somewhat, and they're actually declaring a dividend for the first time in a while, something like 40 cents a share. So I'm sure that long-term investors of that stock will be quite happy with that.
Petri Redelinghuys, thank you very much. Always good to see you.